Hi, thanks for tuning in. You're watching NDTV Profit, and Jana Small Finance Bank's IPO hits the market on 7th February, a 570 crore worth IPO. As we mentioned, will hit the market on 7th Feb, and the last date for putting in the bids is 9th Feb. Joining us for a very quick chat is Mr. Ajay Kanwal, who's the MD and CEO of Jana Small Finance Bank. Sir, thank you so much for joining us for this conversation on NDTV Profit.
Thank you, Pragati. Thank you for having me over.
Yes, thank you, sir. And I would like to quickly start the conversation with, as we all know that your RHP has also said that the proceeds from this IPO will be primarily used for the augmentation of banks' tier one capital base. So, is there any other purpose as well that you're planning to deploy these funds? And if it's just for that, then how long do you anticipate these fresh proceeds to last you?
Right. Pragati, thank you so much. And listen, primary reason is we are a growth bank. So tier one augmentation is required as we continue growing. And we don't see any reason for additional capital in the foreseeable future because we do have annual profits, which
Hmm.
we add to our capital. And
Hmm.
that also supports a lot of our growth.
Okay. Okay.
Yes.
So foreseeable future, as in, can you define that as a
So, I
time?
mean, we've done some modeling for the next 3 years at least.
Hmm.
There is no reason for us to raise any more fresh capital.
Okay.
Secondly, I must also say that in our current capital, um, roughly about 90 odd percent is tier one. So
Hmm.
if we did ever feel the need, even after 3 years, we can choose whether we want to go for tier one or tier two.
Okay. As of now, you're well capitalized for at least 3 years.
Absolutely.
All right. Fair enough. So, I went through your numbers and the business model as well. And what I can see in front of me is that a major chunk of your business is based on unsecured lending here. Given the recent RBI flags on it, and rather, I would not say they are too recent, it's been a while now, RBI has flagged it. Do you plan to tweak your business model going ahead? Because clearly, unsecured lending is a major worry for the RBI as well.
Absolutely. So I think a few things, Pragati, for all of us to know. See, Jana is a 16-year-old institution and the roots are microfinance.
Hmm.
And when we began the bank, which was 5.5 years ago, we were entirely microfinance. And so you're absolutely right that way back then we all decided that, listen, if you want to be a resilient, consistent bank,
Hmm.
we must try and go and move towards secured.
Hmm.
So today, as of September results, which is what the RHP and the IPO is based on, our secured business is our majority business. We are 57.8% secured.
Hmm.
And I must say that achieving secured wasn't the only objective because in our case, secured means it's largely property backed.
Okay.
So, which is, as we know, in the most difficult of times, property backing is the most resilient asset class.
Hmm.
Now, moving to secured was also very natural for us, because if you take a consumer, the largest loan on a consumer balance sheet has to be a home loan.
Hmm.
Or rather, let's say if he's in the mid 40s and has, hereditary wealth or property, it'll be a LAP.
Hmm.
So for us, moving from literally no secured to 57.8% secured were also very natural, intuitive move.
Hmm. Hmm.
And yeah, it did take some effort in terms of when you start a business, you're really putting models together, you're working very well. So
Hmm.
yes, so Pragati, I completely agree with you. Our bias over the last 5.5 years is to move secured.
Hmm.
We have moved secured. We continue to move secured, and that focus will not stop even as we speak.
Okay. So, how much do you plan to increase the share of the secured business now going ahead, and what is the timeline for this?
Okay, so as you know, any forward-looking statements can get me in trouble. But I think fair to imagine that we've made a significant and majority move
Hmm.
into secured 57.8.
Hmm.
Second, most importantly, during COVID, our
Hmm.
secured model also got tested.
Okay.
How strong it is. Because if you launch a new business, doesn't mean it will be a right business, right? But if
Hmm.
you launch a new business and it's stress tested, then you figure out that yes, your processes, your rules, your scorecards all work well. So that has been tested. It gave us great confidence.
Hmm.
I must also say that there were minor tweakings we had to do,
Okay.
having learned from COVID, which we did. So yes, we have got now a very clear idea in our minds. And interestingly, because we launched it way back in 2018, We also have great reception from consumers that they have now believing that yes, if you want affordable housing, Jana is certainly one of the names we should do. MSME, we should certainly go and approach them. Microlab, they're approaching us. Two-wheelers. So I think we've also got presence in those markets now.
Got it. Okay. So, okay, let me put my question in this way now. I understand that okay, you can't give us a forward-looking statement, but do you plan to continue cut down on unsecured business going ahead? Because if you plan to cut down, that would be a significant cutting down. And that would require a lot of operational changes as well on your end.
So very good question, Pragati. Really, I mean, it's very important that I explain this. See,
Hmm.
we didn't cut down business.
Hmm.
We slowed, had two different growth rates.
Okay.
So I'll give you an example of first half 2023 September.
Hmm.
Our secured business is growing at 20%
Hmm.
in the first half. Our unsecured has grown 8 or 9%. So I
Okay.
think what is happening is you can see the mix changing
Hmm.
because one business is moving faster than the others.
Okay.
The second very important thing is, secured naturally is a longer tenor business.
Yeah.
So it doesn't run off very fast.
Hmm.
Unsecured is, in our case, is a 2-year business. So it
Okay.
runs up also very fast. So even if you're not growing very fast, the amount you add to your balance sheet is actually much smaller.
Okay.
So I think the natural, see, because for us, yes, microfinance is core business for us. We have
Hmm.
done it for 16 years. We know it very well.
Hmm.
There is no reason why we would try to, exit from it.
Hmm.
But what we have done is we changed our growth rate. And as you would imagine, if you take the middle end of India, there is a huge demand. I mean, our mortgage to GDP ratio is about 11%.
Hmm.
China at a 18, a US at a 50 tells you there is great demand.
Hmm.
And because we were a brand presence in national, about when we started a bank, we were already in 650 branches. We were
Hmm.
in 22 states. Now
Hmm.
we are in 24 states. So we had a good presence. We just needed those product offerings.
Hmm.
And I think that has helped us turn to a largely a secured run bank, but also a secured run model, I would say.
Okay, fair enough. So I'm glad you brought up the states and the India bit. And please correct me if I'm wrong here. Your advances, as I can see, are largely concentrated, or the pool of advances are largely concentrated in Tamil Nadu, Karnataka, and Maharashtra, and deposits largely concentrated in West Bengal. Do you see this pattern changing? Because in order to grow ahead, you possibly have to expand your footprint and diversify out of these states as well. So, what is the strategy, if you can help us understand?
Sure. So, Pragati, we have 771 branches as of September,
Fair, yeah.
and we are in 24 states.
Hmm.
Our top three states, total concentration, which you rightly mentioned as Tamil Nadu, Karnataka, and Maharashtra in the asset side,
Hmm.
is 38%.
Hmm.
So, if you take all the small finance bank, it has got the least amount of concentration in the top three states,
Hmm.
which also tells us that it's got a good middle order batting order.
Okay.
For example, the next state would be MP at 7%,
Hmm.
UP at about 6.5, 7%. Then we got Bihar, we got Odisha. So it's a good long middle order.
Hmm.
The positive side of this is, typically when you try to go to a new state, there's a lot of operational work, it's extension of management, it's, going there. We are present. Now, for me to go from A city to B city, which is say 60 to 90 minutes away, is not very difficult.
Okay.
So for us, geographical expansion in 24 states would mean I am in city A, I'll go to a nearby city B. We already know the state well. We also have some experience there. So I
Hmm.
think for us, branch expansion will not be a challenge.
Hmm.
And I think very importantly, from a risk perspective, we are very geographically diversified, which has been the attempt since we began the bank.
Okay. So, what are the next states that you're looking at, or the number of branches that you have?
I think for us, states is already 24 is large.
Okay.
Now is the next number of, which adjunct cities. So let's say I'm in city A, I'll
Hmm.
make the city A where I'm fully present hub because there is credit staff, there is operational staff, there is
Yeah.
management there. I'll go to the nearest next city, which is 60 to 90 minutes away, make it a spoke, manage it like that. When the city becomes bigger, make that a hub, then go to the next spoke. So it's just a adjunct city growth. We are in about 180 odd cities. So
Okay.
I think we've got enough room to grow, Pragati. I think geographical addition is not one of our biggest focus areas. I think doing more with our customers in our current geographies, and
Hmm.
because we are very well spread out, getting more and more leadership position. So, you really want to be the top 3 to 5 players in what you do and where you do.
Hmm.
And I think that is not just a market share issue. It's more about how customers accept both your product, your servicing, your
Hmm.
brand. I think to us that is very important.
Okay, fair enough, sir. So I want to touch base upon a little on the sectoral side of the business as well. Now, CASA and cost of funds have been two major things that have been a cause of worry for the banking sector at large, especially in this quarter. If I look at the March 23 numbers that are there in front of me, your CASA has been falling, which could might indicate that in the near future there might be a problem in terms of cost of funds. So, can you help us with some guidance on that? And how do you plan to manage cost of funds, and where do you see them settling or normalizing in the near future?
So you're right, Pragati, which is, cost of funds have been going up
Yeah.
and for us also have gone up. For us, the cost of fund has increased to 7.6% as of September.
Hmm.
However,
Hmm.
our net interest margin as a bank is at 7.8%. There has been no drop in that.
Yeah.
So I think because of the mix of products we have,
Hmm.
we managed to make sure our NIM remained right.
Hmm.
So while we have seen a increase in our cost of funds, we made sure that our NIMs don't fall, and that is a function of how we are distributed and how we focus on the product mix. But having said that, remember, even my secured has grown, so I've not become unsecured to change my NIMs.
Hmm.
I've increased my secured from 55% in March to 57.8. Yet between micro-lap, affordable ticket size, etc., we have managed well.
Right.
So I think our NIMs remain intact.
Okay.
Even though cost of funds have gone up, I would imagine the cost of funds would plateau out. So that's one.
Okay.
Two is, after 5.5 years as a bank, we are at 20.5% as of September in CASA.
Mm.
And I think we do have work to do. Our
Yeah.
bias really is to grow it granularly and grow it over a period of time rather than do a rush growth. So, which is what we will focus on as we go ahead. But we
Okay.
clearly have in our minds very clear that we will consistently grow CASA.
Okay. Do you think you can maintain the NIM levels that you are at right now?
So our understanding is that, listen, we are competitively priced because as you can imagine, there is enough and more competition across every geography from variety of both banks and NBFCs.
Right.
So we find no reason for us to feel that the pricing would change.
Okay.
The cost of fund, we do imagine we are probably at the peak as we speak.
Hmm.
So nothing tells me that the NIMs would have any different answer, at least in the foreseeable future.
Okay, fair enough, sir. So before I close this conversation, I have one last thing to understand from you. Again, I think this would be based on March 23 numbers that are there in front of me. So 23% of your gross advances are now in agriculture and 41% in personal loans. This is a reduced number compared to March 22, if I have to say. uh, I might be a little wrong here, but I still want to understand relatively your gross advances have increased in the agriculture sector. So, anyway, this area has been facing some problem in terms of rural recoveries and all. Am I sensing it right that you're moving from one troublesome area to the other, or what is the strategy at play here?
Good you asked that, Pragati. So listen, it's very simple. When we say agri, this is the GLG model
Hmm.
of microfinance. So
Okay.
we do lend under the GLG model for microfinance, and that is what I mentioned is that we are a 16-year-old business
Hmm.
and it operates very well, I must say, um, in terms of repayment. So we don't have a worry as we grow our GLG model because that is not a new model we are doing. That is the one we have been doing for so long.
Okay.
Obviously, you go through stress periods like COVID,
Hmm.
which is natural. But other than that, this model works very well. So we are not very uncomfortable. The
Hmm.
other piece, Pragati, that we have done is, if you see our branch breakup, 36% of our branches are
Hmm.
in unbanked rural centers.
Right. Yeah, they are.
This is the RBI norm for scheduled commercial banks is 25%.
Yeah.
So we have actually gone deep into the geographies. We understand what we are doing. We want to make sure we are there in the last mile so that there is least amount of chance of any NPAs or any mistakes from the bank's side.
Hmm.
And so certainly we will be very comfortable. We are very comfortable doing this business. this business has to grow. One is, of course, there is underbanked, underserved. But remember, all of us banks also have a agri, small and marginal farmer expectation also. And as a small finance bank, financial inclusion is pretty much core to us. And so we understand the risk.
Mm.
It is something we have done in the past for many, many years, I would say over a decade. We will continue with that. It will continue to grow, but I can assure you and the viewers that that is GLG model, and it is absolutely something that we are risk-wise comfortable.
All right, fair enough. Thanks so much for talking to us on NDTV Profit, sir. It was a pleasure having you over here.
Thank you, Pragati, so much. Thank you so much.